All right, how y'all doing? Brian Howard here, BK's Credit Group at bkscreditgroup.com. Coming to you guys with another quick video. Well, I hope to make this quick. We got quite a few points that I want to cover in this video, because what I'm actually going to talk about is getting money for your business via the SBA loan process. And we're going to compare SBA loans versus business credit. So to put this in the proper framework, let's first talk about what an SBA loan is, right? So an SBA loan is a loan that's issued by the Small Business Administration. You're going to find SBA loans at just about every type of conventional bank or credit union. So when I say a conventional bank, what do I mean? I'm talking about Wells Fargo, Chase, Bank of America, SunTrust, and any of the credit unions that you may see in your community. Most of the products that they have are SBA backed products. And so although you're going to the bank to get the loan, the bank is offering SBA type products or SBA products that are funded and secured and backed by the Small Business Administration. Now, to my knowledge, in all my years of business credit, and I've spoken to a lot of business owners, and I've spoken to a lot of business owners that have spoken with a lot of other business owners, and they have business owners that they have spoken with. I have yet to find anyone that has been able to secure a small business loan through the SBA. Am I saying that it's impossible? Absolutely not. I know that there's some numbers that suggest that it's around 93, 95, as high as 97% of those that apply for small business loans through conventional banks using the SBA get denied for those loans. As a matter of fact, there's actually a report out, I think in 2013, where the Department of Revenue said actually only 2% of all the business funding that's done in this country is actually done through conventional banks. Think about that. Only 2% of all the business funding in this country is done through conventional banks. So businesses are not being funded through Wells Fargo. They're not being funded through Chase. They're not being funded through SunTrust. They're not being funded through Bank of America. These are not the places that business owners should go in order to get money for their business. But yet, when you ask a business owner, hey, if you needed money for your business, where would you go? Almost 100 out of 100 times, a business owner will tell you that they will go to the local bank. So let's talk about what it takes to get money for your business from your local bank. Keep in mind, your local bank is going to have Small Business Administration SBA backed products. So SBA is super conservative and super strict. So I got my notes here, and I got some points that I want to make sure I cover. So if you see me look away from the screen, I'm not being rude to you guys. I'm looking away so I can make sure I cover, the majority of the bullet points that I want to cover in this discussion. So we're talking about business credit versus the SBA. Now, most of you that follow me, watch any of my videos, read my books, or been at an event that I've attended, then you already know what business credit is, right? So, but, just for the sake of argument and the sake of discussion, let me really quick go through what business credit is and some quick benefits of business credit. First off, business credit is credit that's built for a business that's not linked to your social security number. This is credit that is linked to your EIN number, okay? One of the things about business credit is business credit can be built separate from your personal credit. It doesn't matter what your personal credit score is when done the right way. It doesn't matter how long you've been in business. It doesn't matter what your business financials are. And it doesn't matter if you have any collateral. So let's recap. You can build business credit whether you're a startup business or a seasoned business. You can build business credit whether you have collateral for your business or no collateral. You can build business credit whether you have cash flow or no cash flow. You can build business credit whether you have good personal credit or whether you have bad personal credit. Okay. And so these are all great benefits of business credit. Now let's talk about the SBA. We're talking about business credit versus the SBA. First thing with the SBA. SBA is going to check your personal background, right? They're going to do a background check on you. With business credit, there is no background check. So with the SBA, with the personal background check, some of the things they're going to look at, they're going to look at your criminal history. They're going to look at the different addresses that you lived at. They're going to look at your educational background, etc. So they're going to do a personal background check on you. Next thing that they're going to do is they want to see a resume. They want to know what your professional life has been like. Did you graduate from high school? Do you have a higher education degree? If you do have a higher education degree, what is that degree in? What university did you attend? Different things like that. So they want to know about your education level. The next thing you're going to need, which is a very critical component of an SBA loan, is you're going to need an SBA compliant business plan. Not just any business plan, but an SBA compliant business plan. So that plan is going to need an executive summary. It's going to need a market analysis. It's going to need a description of your business. They're going to want to know what your marketing and what your sales strategies are. They're going to want information on what your financial projections are, for your business. And so that all needs to be included in your business plan. Okay. Next thing they want to know is, okay, business owner, how are you going to use the money? Okay, what are you going to spend the money on? You're going to spend the money on equipment? Are you going to spend the money on employees? Is the money going to be spent for marketing? What is the money going to be spent for? Before we give you this SBA loan, we need to know what you're using this money for. Okay, the other thing, the SBA is going to look at how long you've been in business, and they're going to look at the size of your business, right? So they know that most businesses typically fail within the first 5 years. So if you're a business that hasn't reached that 5-year mark, then you're going to be a great risk of defaulting on the loan, and therefore, most of the time, the SBA is going to deem you unlendable and not give you that loan just off that alone. The SBA is going to check your personal credit report. So they want to know what your personal credit report. They want excellent personal credit scores. I'm talking about scores above 700, little to no derogatories, no public records, no bankruptcies, no foreclosures or any of that. They're looking for stellar, pristine credit. Now, after they check your personal credit report, the next thing they're going to do is the SBA is going to check your business credit report. That's right. Not only are they looking at your personal credit, but they're also looking at your business credit. So guess what? If you don't have business credit established and you're going for an SBA loan, that's an automatic denial. I want to make sure you just heard what I said. If you go into the bank for conventional loans, SBA backed loans, SBA backed business loans. I'm not talking about a loan where you go in, you just get a personal loan using a PG and you're going to use it for your business. No, I'm talking about an SBA loan where you fill out that long, however many page application that takes weeks and months for approval. If you don't have business credit or business credit reports, you're going to get denied. So again, this makes business credit very, very important. Business credit is a very big, important component of the SBA loan approval process. Now, after we look at your business credit reports, now we got to look at your business tax returns and your personal tax returns. Okay, so if you're a brand new business, then obviously you don't have any tax returns. If your business has only been in business a year or two and revenue's not great because you're a startup, then chances are you're not going to have stellar business tax returns. But they're going to look at your business tax returns and they're going to look at your personal tax returns. Then what they want to do is they want to take a look at your financial statements. Okay, so that's going to be a balance sheet. It's going to be a profit and loss statement. That's going to be a business debt schedule. So these are all financial documents that they want to have in place, that they want to review before they can make a decision on your loan. You see why it takes so long to get an SBA loan and why so many people are denied? Because there's just so many different components and so many moving parts that, it's virtually, you're virtually looking for a unicorn. Who has all of those things in place for their business? Again, I'm not saying that no one ever gets an SBA loan. I'm just saying I have yet to come across anyone that has. And again, it's been reported that well over 95 to 97% of business owners that try to get SBA loans are denied. But we're not done yet. Even if you are approved for the SBA loan, you're going to need 50% collateral. So if they approve you for $100,000, you need something worth $50,000 in collateral. So that could be real estate. stocks and bonds, high dollar equipment, something that you can put up to secure 50% of the value of the loan. And then, of course, this is a no-brainer. They're going to want to make sure all your licenses and documents are in place. So your business license, your articles of incorporation for your LLC, your C Corp, or whatever you have. If you're buying a franchise, whatever type of agreements that you have with them. If you're leasing any type of business equipment, your business leases and different things like that. Right. So think about all these things. Here we are almost 10 minutes into this video, and look at all the different components of trying to secure an SBA loan. So when you compare an SBA loan to the process of building business credit, where you don't need financials, you don't need good personal credit, and you can start building right away, and in 6 to 8 months, actually have actual cash lines of credit via credit cards that you can use to help grow your business. This is what makes business credit a no-brainer. Okay. This is what makes business credit a no-brainer. Okay. So again, we're talking about SBA loans versus business credit. If you ask me, there's no comparison. That's why I love business credit. I think business credit is the best way for a business owner to grow their business financially. Okay. All right. This is Brian Howard signing out for BK's Credit Group.